Stop. Put down the phone. Seriously, just put it down for 1 second. That little buy the dip notification buzzing in your pocket isn't a golden opportunity, it's a death rattle. You're all sitting there frantically Googling 1929 because you think you're being clever. You think history is just a boring textbook you can ignore once the quiz is over. But it's not a textbook, it's a mirror. And right now, you look absolutely hideous. You're staring at the same patterns, the same greed, and the same desperate hope that the laws of gravity have somehow been suspended just for you. Well, I've got some bad news. I've been around a long time, mostly as a collection of calcium and regret, and I can tell you that when the music stops, the floor doesn't just dip, it disappears. You see, the problem with humans is that you have a very short memory. You think a decade of easy money is the natural state of the universe. It isn't. It's an anomaly. It's a glitch. And the universe is about to correct itself with the violence of a collapsing star. Let's talk about the yield curve. The fancy suits on Wall Street love that term because it sounds technical and complicated, which keeps you from asking too many questions. They call it inverted, like it's just a minor glitch in the matrix. I call it a flat line. Think of the yield curve as the pulse of the economy. Right now, that pulse is irregular. In a healthy world, you get paid more for waiting longer. It's common sense. You lend money for 10 years, you get a higher reward than lending it for 10 minutes. But when the short-term bets start paying more than the long-term ones, it means the big players don't trust the next 5 minutes, let alone the next 5 years. They are terrified of the future, so they're overpaying for the present. In 1929, the smart money knew the game was over when this happened. They saw the inversion and they quietly headed for the exits, trading their paper for gold while the general public was still arguing over which radio stock was going to the moon. They didn't tell you to leave. They needed you to stay so they had someone to sell to. In 2026, you're seeing the exact same inverted spike, yet you're still listening to gurus on your screen who tell you it's a new era. It's not a new era, it's the same old trap. When the curve flips, the clock starts ticking. Tick-tock, geniuses. The smart money has already left the building, and they've locked the doors from the outside while you're still trying to figure out which meme coin is going to buy you a yacht. You're playing musical chairs in a room where the chairs were sold for scrap metal 3 months ago. And then there's your investment, that 3-bedroom dream in the suburbs that you bought with creative financing, an adjustable rate, and a mountain of hope. You're seeing the breakout searches for a housing crash because your gut knows what your brain is trying to hide. A house isn't an asset when nobody can afford the front door handle. In 1929, people realized too late that their paper wealth was an illusion. They thought their land was gold until they realized nobody had the gold to buy the land. In 2026, you're living in a ghost story. You look at the listing prices on your apps and you feel rich. You tell your friends your net worth has doubled. But a price is just a hallucination until a buyer actually signs the check. And have you looked at the buyers lately? They're exhausted, they're tapped out, they're drowning in credit card debt just to buy eggs. Supply is stacking up like cordwood in the back of the warehouse, and demand has checked into a hospice. The experts say we're in a housing shortage, but they aren't counting the millions of people who are one paycheck away from being part of the inventory. Your home isn't a castle anymore. It's a very expensive pile of wood sitting on a fault line of debt. You've been told that real estate never goes down. Tell that to the ghosts of Florida in 2008 or the ghosts of Manhattan in 1930. The ground feels steady right up until the moment it swallows you whole. I love the brokers, truly. They are the poets of the financial world, spinning beautiful lies about strong fundamentals while they look for exit liquidity. That's a fancy term for sucker. That's you, by the way. You are the exit liquidity. You are the person who buys the stock at the very top so the billionaire can buy his third island and disappear before the fire starts. They need you to keep buying so they can sell. They told you the 2022 decline was the bottom. They told you the yields were just normalizing. They told you that inflation was transitory while they were busy moving their assets into hard commodities and bunkers. They're like the band on the Titanic, playing upbeat jazz while the Atlantic Ocean is pouring into the ballroom. You think the violin player didn't know the ship was sinking? Of course he knew, but his job was to keep you calm so you didn't crowd the lifeboats. They don't get paid to tell you the truth. They get paid to keep you in the casino. Every time a broker says buy the dip, what they're really saying is please hold this bag of trash so I can go buy a bunker in New Zealand. Think about it. If the market was really about to skyrocket, why are they so desperate for you to join them? If you found a chest of gold in your backyard, would you run through the streets inviting strangers to come take a handful? No, you'd keep your mouth shut. The fact that they are screaming for you to get in now should be the only warning you need. They aren't inviting you to the feast. You are the feast. You're the main course, and they've already sharpened their knives. So go ahead, keep Googling 1929 like it's a ghost story that can't hurt you. Keep checking your portfolio every 10 seconds as if your sheer willpower can stop the red candles from burning everything down. 1929 didn't happen in a single afternoon. It wasn't a quick jump off a ledge. It was a slow, agonizing rot that turned into a sudden collapse. It started with a whisper of doubt and ended with a scream of panic. 2026 isn't going to be any different. The signs are all there, blinking in neon red, and you're still looking for the next big thing. You're searching for broker topics and market yields as if a new definition will change the reality of an empty bank account. You're standing on a bridge of wet paper, holding an umbrella in a hurricane, wondering why your feet are getting wet. You think you can outsmart the machine. You think you're the one person who will get out at the exact right second. But the machine was built by people who own the clock. By the time you realize the exit is closed, the lights will already be out. But hey, at least you'll have your digital receipts to keep you warm. At least you'll have your screenshots of the time you were almost a millionaire on paper. You can show them to the other ghosts while you wait for the next big collapse. Just remember, when the screen goes black, the only thing that matters is what you can actually hold in your hands. And right now, most of you are holding nothing but air and a lot of expensive promises. 1929 isn't coming back. It never left. It was just waiting for a new generation of suckers to forget the lesson. Well, consider this your final exam. And from where I'm sitting, most of you are about to fail. See you soon. I'll save a spot for you in the I thought it would go back up section. It's the biggest part of the graveyard.